Good morning, everyone. It is Friday, July 30th, last trading day of the month for July. I cannot believe we will be in August when we kick these back up again on Monday. I do not know where this year is going to. This is Nadex Morning Analysis. I am Todd Rich with Nadex. With me from Keep Trading Simple is Brian Caprice. Before Brian and I jump into hot spots for the day for this exciting Friday in the summer, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, what are we looking at today? It is a quiet day in the summer, except for one thing. We do have a volatile spot in the market. That volatile spot is going to be the NASDAQ 100 index. So we are going to talk about technical levels in the NASDAQ. Why is the NASDAQ so volatile this morning? That is because Amazon came out with earnings last night after the bell. And I'll let Brian go through it. Granted, they were only expecting them to make $12 per share, roughly. And they came in at $15 per share. So they blew that out in terms of earnings per share by 25%. They did lower expectations for revenues going forward as people come out of lockdown and people start doing more things versus consuming more things. Amazon did temper expectations. The stock was down 7% after hours. Looks like it's going to open down 7.25%, which is a pretty big hit for Amazon. And then we know that the big three in the NASDAQ index, Amazon, Microsoft, Apple, right behind that are Google and Facebook. But the index itself was taking a hit because of that. So that is our hot spot in the market for today. We'll also do a quick little review of what's going on in the dollar. The dollar was getting hammered all week. It gained some of that back last night a little bit. So, but dollar has calmed down quite a bit. Gold punched higher yesterday, finally broke out of that range. Now it's calming down quite a bit. So things are a bit quiet other than the equity indices and particularly the NASDAQ. So there's the quick intro, although that wasn't all that quick. Brian, I'm going to flip it over to you to give us all the deets on all of this.
Yeah, sure. I mean, it's been a rather quiet 24 hours, and like I said, it's the really the last trading day of July. So everybody prepares for the first week of the trading month. Again, very popular vacation time right now. So again, not really necessarily surprised, and we didn't really have any blockbuster news this morning. As you can see on kind of the currency front right now, I mean, it's really flat. I mean, in 24 hours, the euro dollar's moved 10 pips, pound dollar down 4. Dollar yen -5, and you can see these are some retracing, but -20, -22, -23. Euro pound is difference of 10. We had talked earlier this week about how we'd seen so much pound strength. We're waiting actually for kind of the profit taking to happen in the pound, that we expected to see some weakness and see the euro popping a bit. It's popping a little bit, and even the pound yen right now is down about 12, so nothing crazy. Preliminary GDP in Germany was actually lower than expected. Even with that, and again, I think that was expected just because of the issues they had with the flooding and kind of, closing things down a little bit. I think they were well on track to keep moving, but all of a sudden that kind of squashed it at the last minute. So I don't think that that's necessarily as big a surprise as many people thought. GDP and CAD came in exactly as expected. Our price PCE index, there's a couple little nuggets of information in here, but it came in still positive, slightly below what it was before. Remember, the important reason, the reason why we look at this and why it's considered a red impact is because of the goods. This is the goods and services that we buy, excluding food and energy, where we know most of the inflation is. We've been told
Right.
that's where most of the inflation is. So it is still positive. It was a little bit less. One of the kind of the nuggets in here to pull out, though, is you can kind of see it over here in the related stories that's coming from the same report. Personal income, basically the money that we're getting paid, did increase as well by only 0.1%. But the goods and services and things like that we are paying, they all went up by 0.4. So we're still kind of at like a net negative. We're not making as much, but we're paying more for things. So again, that is not necessarily what you want to see. And again, that's why it's very important to be able to curb inflation. A lot of people are like, oh, it's just, if we can afford it, yeah, we're getting paid more. Yeah, we are, but it's not going up at the same rate. And that's what makes it a little bit dangerous. And that's why the Fed really needs to make sure that they control it. and they're not. You can see right now, just in the time that I'm talking, we're back to -1, 7, 1, 4, and 6. So it's going low. So as you mentioned, the only thing really that we're seeing today, movement, is obviously NQ. This is an Amazon chart. Amazon
Doesn't look good.
it's one of those things. It's to be able to read these statements, it's a game. I mean, there's the earnings, and they blew that number out of the water. It was up like 23%, and then there's the revenue, which was not as high. And again, there's different costs and things associated with it. So obviously, you would think that, oh, there's so many stocks out there, but there are definitely the heavy hitters. Amazon is a heavy hitter for the NQ.
Yep.
You can see right now it's down 7%. NQ basically is down 1.2% because of it. Now, a lot of this actually started yesterday, and this is what's always interesting. That report would have came out right around in this area here, the earnings. So again, it did drive it lower, but it was already kind of on its way down there. We had the nice little kind of entry at the open yesterday, right at 9:30. And again, I'll drop this down to a 15-minute candle. I got to say, make sure when you're doing your analysis, yesterday there was 2 or 3 of them. Pretty much every day this week, there has been an opening print trade setup where there's been a pullback. This was the one from yesterday where it pulled back and went long, and then immediately by 9:45, 10 o'clock, the market had it. It was it. And you started to see these consecutive lower highs, lower highs, lower highs. We were looking for 15,105. We didn't get there. And again, you were able to start drawing and looking at this saying, hey, listen, it stopped. We got a failure to go higher here. When I pushed down, you can say, okay, I'll give it one more break. And then when it came back up again, there was many opportunities. And by 4 o'clock, really right around this 4 o'clock window is where we started getting the earnings reports. That's where a lot of this really kind of started to come down. And then you can see this was basically the end of when the U.S. side was starting to go to sleep, right? Yep. And then just the Europeans took it. And now, we're dealing with it today. So big question is, how do we trade it? There's obviously 2 levels here. We had buyers stepping in. That's what we bounced off of. They came back up and grabbed this violated level. And again, this actually broke on 3. We had 1 here, 2 here, and then it kind of based in here and then broke through on number 3. But it still did that same kind of a Harry Potter, but typically we like for it to come back earlier, not necessarily come down, touch profit, and then come up and grab it. So I would say right now, yes, the news was negative. The retail trader has not had an opportunity to kind of get in there and deal with this yet. But at the end of the day, is Amazon really a bad company? Are they in a bad situation? No. I mean, so many people, they can make comments about, people are going to come out and do things and not spend as much money. But at the same time, now we have a gamma variant in Florida. Right. And the thing is, Amazon is so convenient. Like, you can say that they're going to go out and do more things. But at the end of the day, when you have Prime, free shipping, sometimes you can even get it in the same day you order it. I don't know. I just feel like the hassle of waiting in line. I have Sam's Club near me, and I love Sam's Club. I haven't gone to a cash register in 6 months. Now that they have it on the app, I can scan all my own stuff, check it out, and walk right out the door. And every single person I'm sitting in line, I'm like, hey, it's like, I just don't understand why you would do it. It's just a convenience factor,
Well, remember, we're talking about people doing things versus buying things. I will tell you, I just took a trip. I went camping where we were just camping. We were just doing and experiencing. But let me tell you, in order to do that, I had to buy a bunch of stuff. And I'll tell you where I bought it. It was just, here's what we need. I need these water bottles, these thermoses, this, these socks for hiking in the water.
So. Yeah, it's so easy. So, NQ may not be where to play because, like I said, a lot of the movement has already been put into NQ. The worst thing you want to do is,
there might be a bottom in here somewhere where yes,
maybe
it's hit.
It could be, and that's what I was kind of getting at. So, the worst thing you want to do is sell after a huge move in price because you're typically the guy that's stuck holding it at the bottom. Or same thing, after the price has rallied really, really high, you don't want to get in at the end. You want to typically get it before the moves. But right now, and again, I'm delayed 10 minutes, so this is probably slightly off. But looking at we'll look at, talk about the 4 different indices. You have ES, which is down 0.6, NQ, which is down 1.15, the YM is down 0.24, and then you have the Russell down 0.31. So if we do have a bottom today and things start moving higher, typically the indices more or less mirror each other. It's very rare that like 2 would go up and 2 would go down. They tend to follow, but you got to look at them and say which one is weak, which one is strong. If we are having a bottom in here, and again, we know why NQ is being drugged down more than the others, does that mean it's going to springboard back up again? No, there is a rubber banding effect to some extent. But if you're looking at those, you could say, hey, listen, the YM is the strongest. It was weaker earlier, right, this week because of some of the manufacturing and data, data we saw.
Right.
So if we start to go positive, it's the closest, most likely it's going to go. When people say, hey, listen, we're green for the day, that seems like it's the strongest. It's been the most resilient. Remember, it's not as much tech based as the NQ would be. So you got to look for levels. And what I would recommend, and again, right now, the way this is setting up on a 15-minute, you can see it's whipping back and forth. I think the NQ is still going to be at risk for the retail trader playing the Amazon play. But some of the other things out there, I mean, like with ES, kind of the same whipsaw back and forth. It's not ideally set up, but you can see that it's got a pretty strong base that was put in here. And if I continue a level across, we had talked about, price breaking through, 43.68. It didn't break through. It actually held and buyers stepped in. So that's a level we should watch out for. And we have room to go back up to 4,400. Remember, 4,400 has been the equilibrium. With NQ, it's been more of the 15,000. Can we rally up? Maybe. But I would say today this is probably more than likely not going to make it all the way back up. That would be a heck of a move to kind of reverse all that. But then you look at YM, and we talked about 35,000. Well, we're only sitting here right now about 100, about 112 points away. You look at the ATR of that one on a daily basis. What does it typically move? Odd figures. I lost my ATR button. Where is it? Average to range. There we go. It has 136, 365 is what the typical move is on a regular day. That's the average, right? We only need 100 to get back up to 35. So, it's kind of one of those things. When you look at it, you say, okay, can I find an entry? Can I find something decent? We got about 30 minutes. We got 2 more bars. If we can pull back just a little bit lower, that could give us the opportunity to get higher. And again, the media may take this and say, hey, listen, this is it's negative, right? But remember, right now, negative data is positive data, because if it's not the best, that means that the Fed is not going to do anything, which means we're going to keep the low interest rates, keep the spending the way that it is. Because remember, we have a fragile economy, even though we're basically near an all-time high.
I was just going to say, an interesting way to potentially play some of these would be watching some of these out of the money binary options. If you do think we're gonna get that pop higher toward the end of the day, you can take a look where there are some binary options where your probabilities of it being in the money might be lower, meaning it'll cost you less. And if we do end up getting a pop, that could be one interesting way to try to play it without taking a lot of risk. And remember, you don't have to wait and see if it actually goes in the money and settles all the way and goes all the way to 100. If you pick one and it just makes it to even money, it makes it to 50-50. If you didn't put a lot into the trade to begin with, and you have an opportunity to take it off for a profit, a binary, you could potentially think about strategies like that. Looking for that pop maybe later in the afternoon as people finish digesting some of this, what I'll call, quote, negative news coming out of Amazon, which is really just, the numbers were great. It's just a little bit of them managing expectations down. And sometimes companies do that. And then next thing you know, they just completely blow them out of the water next quarter because they were just trying to temper expectations. Right.
Yeah. I mean, and they're all within range of big psychological numbers. ES going back up to 4,400, psychological number. We know it's kind of an equilibrium point. It likes it. NQ, again, 15,000 would make sense. Could it do it today? Yeah, but it's the weakest of all. YM, 35,000, definitely within striking distance right now. Even the Russell, 2250, that's what's up on the chart right now. Can it make that? Sure. I mean, it has that's a 15-minute. Let me bring it to a daily real quick. The average ATR on that one is about 48. And when you look at it right now, you can see how close we are. We're sitting there and we're only about 17 to 20 points away from it. So, I mean, breaking through that, even the 2255 is only half of an ATR. So, last day of July, everybody likes to tend to end that thing, end it on a more positive note. Retail traders are going to look at this and say, oh my God, everything's red. We need to short. But that's when the markets tend to go up, is when the average Joe is out there trying to, play the markets. And even gold and silver are down right now, which again should also be another reason why it's, things are, looking up. So,
all right.
Gold has dropped a little bit. And again, we talked about that yesterday, bouncing right off of that 1831 level, kind of coming back down in probably that 1815 and maybe even a little bit lower than that. But that's what we're seeing right now, is the pressure is subsiding from the inflation that we saw, especially with
it did punch out of that range finally. So a little bit of movement there in gold, but really where the action is today, it's we see the dollar kind of calming down. We
Yep.
see, some of these other commodities calming down. Equity indices is where we might see some of the action today, and it's because
Mm.
everyone's going to be talking about that Amazon news, and that will impact the equity markets.
Yep.
So,
And currencies are flat across the board, so I don't think there's going to be a lot of opportunity because there's no other big news for today. So
and in that regard, we one of these days we got to go back and cover some of those neutral strategies where if you don't think a lot's going to happen, doing the strangles where you think it's going to stay within a range, and trying to capture the decay on the wings versus buying the wings. But
yeah,
that is for another day. With that, if you got any questions for Nadex, please email us customerservice@nadex.com. We are here to help. Brian is also quite available. Please feel free to reach out to him. You can email Brian at support@keeptradingsimple.com. Again, a quick little recap. The Amazon managed expectations down, even though the numbers were great. Amazon's getting hit. It is dragging down the entire NASDAQ index. With that are coming the other indices as well. And we'll wait and see what the retail trader has to say about that once they get into the market, have a chance to digest it. It is a Friday. It is the end of the month. So enjoy your weekend. Stay safe, everyone. Brian and I will catch you again on Monday. Good luck in the markets.